Okay, welcome to Inventory Watch. It is St. Patrick's Day, March 17th, 2024. There's a couple trends I want to make sure that you guys are in the know about that I'm starting to see in the housing market. So let's take a look at the numbers. Let's jump into presentation mode and see what we have going on. I'm going to stick myself down here in the corner. And let's start with brand new listing inventory. So we saw another week of increase in new listings. So this week we had 2,061 new listings hit the market. Last week we kind of hit a peak at 2,302. That was the most listings that we've seen since January 1. So we're continuing on the trend of large amounts of listings hitting the market, which is a good thing for us as we try and balance out affordability for home buyers. So this is one of the trends that is concerning to me, that we are seeing new listings come to the market, as well as total active inventory continue to increase. So if we look at total active inventory, every week we've kind of been going up another 170, 180-ish more homes, and we've hit a number of 17,059 total active listings on the market. And if we continue in this trend, we are going to hit 20,000 listings in just a few short months. I would say by the time we're in the middle or towards the end of summer, we're going to hit that 20,000 mark. And that usually correlates with a time when home buyers kind of drop off because school's out, they've already made their purchase, it's getting too hot to go and look at houses. And so buyer demand usually dwindles around the same time that we're going to hit that 20,000 inventory mark, which will probably increase our inventory exponentially from there until the end of the year, unless interest rates drop dramatically for some crazy reason. It is an election year, so we need to keep an eye on this trend that we're starting to see. So if we start getting up from the 20 to the 30,000, if we start getting in that direction, home prices are going to start to come down dramatically here for us in the Phoenix Metro. So something to keep an eye on as we are doing inventory watch. So if you want to stay in the know and you want to see like, hey, when is affordability coming back, subscribe to the channel and let's keep an eye on it together. So total active inventory up another 1.3% this week. We go through the month of March. Pendings and contingents. We started to see pendings really start to pick up. This is peak buyer season for us here in the Phoenix Metro, and we are up another 4.8% in pendings from last week. It doesn't look like it's that much, but we're holding pretty steady, but we don't have enough buyer demand to keep up with the 17% new inventory that we just saw for this month in March. So buyer demand is kind of, I would say, kind of flat, and the average under contract price, like here are the buyers that are running around the market. We had 4,229 pendings in this last week, in addition to what we already had in the market. So we have the under contract price has kind of flattened out. So we saw a huge jump, right, from the beginning of January to, I would say, the middle of February. We saw home prices just kind of make this huge jump from 625 to 678,000. And rising tides raise all ships. So I want to say that the luxury market is playing a huge role in this huge increase. This increase in under contract price is not from the regular home buyers. So let's make that clear. I'm going to go into that data. That's one of the new slides that we're going to take a look at today on this data. The pending ratio right now is at a 52. We had a very slight increase from 51.9 to 52.1. That's 0.3 points of an increase. And so in many zip codes, it is still a seller's advantage. And what I decided to do today was take a little bit deeper dive into this pending ratio and I didn't go into the price points. And so we're going to take a look at today what price points have the highest pending ratio. So we're talking, if you list your home for this X amount of price, it's going to be more likely to sell because of the price point. and locations will follow. So if you want to know what your sold score is, or your pending ratio score is for your home, you can go to mysoldscore.com, and I have them all distributed by zip codes. But today we're going to talk about the distribution of price points, because I think this is very important when people think about our market, when they continue to say, or when I continue to say things like, hey, the average under contract price went from $625 to $678. Like, that's a $50,000 increase in home value. And like I said, I'm going to show you right now that it's because of the luxury market. So what you see on the screen here is the buyer distribution, for the average home buyers. And this is anybody, according to this graph, under like $1 million. So this is the average home buyer. And this is basically showing us that the distribution is 68% of home buyers have a budget between $319,000 and $488K. So you are pretty, if you have a home between that price, then you have a high statistical probability that it's going to sell, and it's going to sell fairly quickly. And then 95% of all buyers have a budget between $170,000 and $638K. So we're going to take a look at that on the next slide, where I have where are all the listings, right? Do we have enough listings to meet the demand of home buyers between $319,000 and $488K? So let's take a look at that. So in the green, we have distribution, right? So where are the listings? Where are all of our listings at for under $1 million? So it does correlate that most of the listings on the market are in that $319,000 to $488K price range. We have right now currently 5,308 homes on the market in that price range. And if we go back to the buyer demand, we currently have 3,321 that are under contract. So that gives us a pending ratio of 63 for homes in this price point, where the average, if we go back and we look 2 slides back, the average pending ratio for all of the Phoenix Metro is a 52. However, if you price your home between 320 and 488, that increases your pending ratio to a 63, which gives you more probability that your home is going to sell. So it's so important in this market not to overprice your house if you're thinking of selling it. The buyer demand just isn't there. So with that said, the average of these like pending ratios between like 169 and 638K is probably, I want to say 60. The pending ratio for this block of the lower price point is 65. Then we have a 63, and then we have a 56. So the average is about 60, 61 for the pending ratio if you price your home between 328 and 638. So you have a good probability. That is where the buyers are. Now, we do want to take a look at the luxury market, because I know not everybody in Phoenix has an average home, right? We have below average, we have above average. And so the luxury market, I kind of picked apart for us to look at it a little bit differently. So let's take a look at the luxury distribution. It looks a little different, doesn't it? So the luxury distribution is, here are the buyers that are currently under contract. This is where the luxury buyers are. So 72% of luxury buyers are in this column and this column here. They have a budget between $999K and $2.39 million. That's where 70% of the luxury market sits. Now, sales over $1 million in our market make up 12% of the overall buyers running around there. So if we say we have 8,900 homes under contract, 12% of them are going to be homes above $1 million or more. So that's the distribution of luxury home buyers and what their budgets are. Now let's take a look at like, where is the actual listing inventory and what is the pending ratio for these. You can see it does match like where the home buyers are. So where most of the listings are between this 999K and 1.69 million. So here, the pending ratio for the luxury market overall, if we were to average all of these buckets, is about a 36. And so that puts the luxury market more in the buyer's control. However, if you get closer to this demographic here, if you have a buyer between 1 million and 1.69 million, the pending ratio is actually 41, which is kind of, I would say, kind of a stalemate where you have a more balanced market here. And that's a 41. This is a 41. So 72% of the luxury market seems to be pretty balanced. It's when you get to these higher price points where you see the pending ratio start to decline. And this is where it's so much more of a buyer's market. There's really only like 20 buyers in each of these categories over here. Whereas in this category, it was, we have over 1,300 listings, but we had like 500 something buyers. So it was pretty healthy. It was a pretty balanced buyer to seller ratio. So that's what's happening in the luxury market. And I kind of stopped the graph here at 5.19 million, but we had buyers in our market up to like $30 million this month. So like I said, the rising tides will raise all ships. So if we had a $30 million sale, that's going to put our average and our median home price, like our average home price, it's going to make it go up. So that's why we saw that big jump from 625 to 678. So that is the listing distribution for the luxury home buyers. So let's go here, mysoldscore.com. So this is where, if you want to figure out like what's my ratio, like how likely is my home going to sell in my zip code, you're going to want to go to mysoldscore.com and just fill out your profile. It's like 3 easy steps. It's your name, it's your address, and you go ahead and get your sold score instantly. And it's free and it doesn't cost anything. So it's awesome. Let's talk about mortgage rates. So mortgage rates, this says February 18th. So I think I kept this one on here because it's kind of where we peaked with mortgage rates so far for the year. We went as high as 7.14%. We started the year with lower interest rates in the mid sixes, the low to mid sixes. And we are right now, the 30-year fix is at a 7.09 and a 6.6 for FHA. So they've kind of been a little bit of volatile, but we haven't gone up. Like we haven't hit close to that 8% like we saw last year. They've been kind of ranging between 6.5% and 7%. And if you go to a broker, like I mentioned last week, I get texts from Jim at Arizona Wholesale Mortgage. He always gives me rates and they're always lower than what is reported by Mortgage News Daily. So if you want a mortgage under 7%, I would say go talk to Jim at Arizona Wholesale Mortgage, and I'll put his contact information below the video. So, and then sold homes, the March target to beat is 7,602. Are we at currently? We are at 3,096. So will we beat it? We'll see. I don't know if I didn't put like my estimate here of like where we'll be, but I think that we're probably going to beat this year. I think we are going to have more sales than we did last year, but not by much. So let's talk about the rental market. So rental market's interesting. So the rental market saw a slight increase, like 0.2% of active inventory from last week. But new listings actually didn't increase, but we did see total active listings increase, which meant that rental demand is low because we didn't get barely any new listings, but we did see the active inventory increase. So that means rental demand is kind of on the low side. So, which is interesting because when we looked at the numbers, the net was minus 43. So we went from 651 active renters this week to 608. We actually saw a decrease. We had 563 lease starts. So some of the people from here started their lease, right? So this is the number of people that put an offer in to rent their house, and then a lot of them will start their lease throughout the week. So that's why these numbers kind of shift this way. But we didn't see the demand make up for the amount of people that started their lease. We actually saw that number fall. So that is why we're starting to see active inventory increase. And so we're not seeing like the huge rental demand come through this month. So closed rentals, we are at 1,590 closed rentals. We did beat out March as the number of closed rentals. And the average rent price right now is $2,263 for about 1,700 square feet. It's down $24 from last week. So that does kind of make sense that we did see a drop in demand and a drop in the rent price to kind of correlate for this week. And then the pending ratio went from 10.3 to 9.6. So we did see a drop in buyer or renter demand week over week, which is not usual. It's not something that I see going week over week. We usually see the pending ratio drop for the first week of the month and then increase incrementally until the end of the month. And then it'll kind of reset and we'll get a new low number. We definitely are not seeing that in March, which is kind of a red flag. So we're going to have to watch the trend. So we'll see. So that's where we're kind of at. I feel like the rental market is kind of a balance right now. It's not too many buyers and it's not too many sellers. And so we're kind of a little bit of in a balance. And so in a lot of the zip codes, I think the buyers do have the advantage in these rental listings. So that's what I have for you guys. So just to recap, home inventory is starting to increase. And so that is a positive sign for affordability, maybe hopefully coming back. Hopefully that'll pull back some of the pricing a little bit. I don't see that we're getting so much inventory that it's going to completely crash the market, but it will create some kind of a pullback on pricing, which I don't think is the end of the world for us here. We're pretty balanced. We have like home prices have gone up so much that a pullback is needed. And so that's what I'm starting to see. If I start to see inventory increase in like at like an exponentially fast rate, then that could have some crashing effect on our market, but I'm just not seeing that at the moment. So as we go, the next few months, it'll be interesting to watch that. And just remember where the pricing is. If you're thinking about selling your house, that the home buyers have budgets between $320 and $488. And that is like kind of the magic number of like where a home will sell more quick in this market. So thanks for joining me for Inventory Watch. If you found this helpful, please subscribe to the channel and see you next week.